Hey guys, welcome back. DeFi, degens, drip, and farm for property. I'm your host, Drip Coach, dropping knowledge bombs on all Forex Shark related projects. And in today's video, we got another banger regarding the pig pen, the bread and butter of the animal farm ecosystem, the wheelhouse that makes this whole thing work, and the whole point of having the farm and the ownership aspect that you should be striving towards. So the pig pen, if you are not aware, is the go-to play in the farm because it gives you ownership, a percentage of ownership over the farm. Now, what does that ownership actually mean? Well, if you're familiar with Forex and his explanations and what he's trying to do in DeFi as a whole, he always says he's trying to bring the traditional financial vehicles to DeFi. And one of those vehicles, a couple of those, let's rewind, a few of those he's already done, such as CDs and annuities, right? But another vehicle is dividends or also kind of real estate. So you can look at the pig pen as one of those two areas, and we're going to explore both of those in this video and show you a breakdown of how they compare to that traditional financial vehicle. So let's first explore dividends. So if you're not familiar with dividends, a dividend is a share of a company's profits distributed to shareholders as either stock or cash, usually paid quarterly like a bonus to investors. Unlike share price, which can change from day to day, once a company declares it will pay a dividend on a specific date, it's as good as guaranteed. So basically you buy a stock and then they give you a portion of their revenue and profits. And there's a bunch of different ones. We're going to explore a few in the traditional financial market and look at what their dividend payouts actually are. But also, as I mentioned, more commonly that you would see this for most people would be investing in real estate. So it's not the same as a stock dividend, but ideally people buy real estate so that they can rent it out and then they get that passive income. So both of these are ways of getting passive income. And that's exactly how the pig pen is designed, right? So the pig pen pays out a bonus every 24 hours based on the amount of pigs you have compared to the total amount available and divided by the amount of rewards in the vault. So that sounds complex, but it's really actually pretty simple. I'm going to break it down in another video in detail of what you can expect these payouts to be. But the long and short, for those of you not familiar, you put your pigs in here and then you're given a percent every day based on those pigs. So just like the dividend definition said, it doesn't matter what the share price is, you're getting that guaranteed payout because it's based on the BUSD amount in the vault. Now, as I said, most people are familiar with rental property. So let's look at what it would cost you to try to get some kind of passive income from a rental property. So a quick Google search shows that the median home sales price was $428,000. Before it was $329,000. I'm not going to be using these numbers because that's insanely high and most people couldn't afford that. But let's say you were able to get a house for a little bit cheaper, around $225,000. Maybe it's a fix up, a flip, or something to that effect. I know you can definitely get cheaper flipping houses, but we want to just have some kind of data to kind of look at what a passive income would look like. So we're going to use $225,000, which is extremely cheap and less than compared to what the median average is, but we got to start somewhere. And with that, we're also going to be looking at the rental price. So I'm using the average median rental price that has gone up year over year. Now this is for houses, but you can know apartments be different or whatever. But again, we need some kind of number. And the fact that we're using a $2,000 rental price with a $225,000 home actually means that my analysis will show mortgage, rental property, real estate as a much more lucrative investment than it probably actually is. But we got to get numbers from somewhere. So we head on over here to calculator.net, and then we can actually say, we can put these numbers in, right? So we're going to look at getting a loan because most people don't have $225,000 in their account. Zero down payment because we're comparing it again to kind of DeFi. The average interest rate on loans, I looked that up, it's about 6.5. Just under 7, 30 years, closing costs, all this stuff is pretty much basic that you're going to have to pay, right? So, and we're saying the rent that we get would be $2,000 per month. All right. So when we calculate this, what we end up having is essentially a monthly cash flow of $138 per month after all of our expenses and stuff is paid. Eventually, yes, of course, we'll be able to own this home outright in 30 years, and then we might be able to sell it and make a lot more money. But our monthly cash flow, remember, that's what we're looking for. We're looking for passive income, is $138. And there's a lot of overhead and BS that comes with this from having a physical place. And this already takes into account that you may not find someone to rent it immediately, or throughout the year, someone may move out and you gotta find somebody else. So this is a very conservative, or actually I should say bullish figure, because we're using a higher income monthly rental amount with a much lower cost for the home. So that'll give us about $1,600 per year, right? So I actually put that in our handy dandy spreadsheet here, right here, so it's easier to look at. So that gives you an APR of 0.74%. Now, before we move on to our next yield bearing asset, just a quick message. Please like, subscribe, and turn on notifications so you don't miss another video. This helps bring brand awareness to the channel, as well as all Forex Shark related projects. Thank you. I want you guys to remember that we have this membership going on in my group. So I'll be doing different awards, incentives, giveaways, all that good stuff. Some of the people in the group have already mentioned they want some kind of alpha on moves that I'm making, or information that I get from maybe the whales or whatnot in the groups that I'm in. So I'll be sharing that exclusively in this group first. So if you're interested in that, here are the tiers, and giving away some drip airdrops. So that's our word from our sponsor, plugging that right now. All right, let's move to the next item on the list, index funds. So this is a way that most, I'm not gonna say most, but a good way if you have patience to generate some fairly decent yield. Now, where did this come from? Glad you asked. We have over here our index fund calculator, and index funds on average are about like 8%, but over decades, it's about 10% it's been doing. Some go up to 30 and then it drops down with a negative of 20, but over average, it's about 10%. And then looking at this investment over 10 years, this is what it would net you. Now remember, this goes up every year because it's compound interest. So what I had to do was take all this, add it up, and then just divide it to get the average amount so that it would actually work for our example. And that's where I got here. So you're making $132 with 16% APR. So this will be a much better investment than real estate in the short term. Remember, the goal of this is passive income. It's not about buying houses or anything like that. It's how much can you put up and get back quicker than waiting for 20, 30 years. So index funds would be a good option, but you're going to need a decent amount of capital to actually see some returns. So that's why it's $10,000. Next, we move into the dividend stocks, because that is the most common model we were talking about before. And you have some of the top earning dividend stocks that pay out on average about 3.7% annual yield. Now, each of these stocks costs a different amount, so there's no real way without me going to each one to find out, how much it would cost, how many shares you get. But we can still take these numbers, and I went ahead and rounded it up to 4%, even though you can see none of them are at 4%. There are some stocks that are more than that, but 4% will give you a whopping $8 a month passive income. So you can see where I'm going from this. Nothing in traditional finance compares to what Forex is building. Why? Because there's not as many hands in the cookie jar to take away from your dividends. So we move to the piggy bank, pig bank, where all of the dividends are actually coming from right now. So right now, pigs are less than $120. So 10 pigs will cost you about $1,200. Where do I get that from? Well, right from the actual website. Pigs are $114. I rounded up to 120. 120 times 10, 1,200. Simple math, right? And they are getting a monthly income of $66 from those 10 pigs. And yes, that is a bit variable, just like all the other stuff I mentioned in traditional finance, because that is based off of the total amount of pigs in the vault and the BUSD rewards in the vault. But as I mentioned to you guys in my previous videos, this is not going to increase that dramatically, because the only way to farm pigs is with the 2 dog farms. And I don't see a lot of the whales just buying tens of thousands of pigs right now, but they will, as they get rewards, put them back into the pig pen and accumulate more pigs. So I see this going up maybe a couple hundred per month, maybe even, I'll call it 10,000. We'll say 10,000 per month at most. And there was 360,000 in the initial contract. So I'd say we have about 6 months before we even start to mint some pigs, especially in the bear market, because I would see the whales actually taking their BUSD dividends, as Forex mentioned, and then just leaving the standard pig position. So what I'm getting at is I think this reward payout of roughly 22 cents per pig can sustain itself for quite some time and give the BUSD rewards time to appreciate and catch up as new pigs are being added to the vault. And again, some people might also sell those pigs, keeping the vault about the same. So that's 22 cents per pig. So at 10 pigs, that would be $2.2 per day. And you can find that out from here. It shows you what I got and just divide that out. You can also do that with this number here, divide these two together, and you'll get the same thing. So the pig pen is an insanely bullish play right now because that is giving you a 60% APR at these prices. Again, it can change a little bit, but I don't see it changing that much. Even if it goes to 50%, you'll be able to ROI in 2 years compared to 30 years. What is that? 5 years, 25 years. So, and this is money that you can take out every month and spend, or as Forex said, which you should actually do, this isn't enough to change your life, but you would live off of 5% of this and reinvest the remaining back into the pig pen, buying a bigger share of pigs. And you do that every month and accumulate your pig's position. So hope that provided value for you guys and broke this down a little bit so that you can understand again what Forex is trying to build and what he's bringing into the ecosystem, how it compares to traditional finance, how he's going to continue to leverage these assets and bring more and more into the space, and why this is a long-term play and very, very bullish in my opinion, for those that understand how this works, and why I'm spending so much time trying to educate you guys on this. Drip is still king. We're going to keep using that. But now you see why the pig pen was created. I'm sorry, the animal farm, and what the pig pen does and how it works for the whole ecosystem. And I think once the eyes get put back on drip, we will see drip kind of start to get more attention and move back up. Not going to shoot up to all-time highs, but I definitely see the scratchy and the borrow and lending supporting the drip price in the future. And I think, as I mentioned you guys, and you should have seen my video already on the scratchies, if we as a community can do that, so I'm going to try to rally the other content creators to get their teams to support investing in a team lottery so that we can actually take those losing tickets and your team leader on behalf of the community stakes that and puts that into the reservoir. That I think is insanely bullish. Maybe Forex will find a way to implement rewards into the reservoir as well. But that's how we as a community can benefit, because you don't lose anything. You're going to buy scratchy tickets and let your team leader buy them. And if you guys win, you split the profits. If you guys lose, you still split the profits because it's going into the reservoir. Just make sure you got a team leader you can trust. So don't just go ape into some of these BS channels and moon boys that probably just take your profits and run. But anyway, that's for another video. Just wanted to share that and how all this integrates together and how I do see a positive future for this ecosystem. So let's ride it out. And you know the drill. Smash that HBO special. Help a brother out. Let's continue growing my channel because I enjoy doing this for you guys, and I hope you guys enjoy it as well. And until next time, live daily and achieve your impossible. See ya.